you very much, and I just want to congratulate everybody. The stock market, Dow Jones Industrial Average, just hit 30,000, which is the highest in history. We've never broken 30,000, and that's just despite everything that's taken place. The stock market's just broken 30,000. Never been broken, that number. That's a sacred number, 30,000. Nobody thought they'd ever see it. That's the 9th time, and it's the 48th time that we've broken records during the Trump administration. And I just want to congratulate all the people within the administration that work so hard. And most importantly, I want to congratulate the people of our country, because there are no people like you. Thank you very much, everybody. Thank you.
Welcome, everybody, to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks nudged higher on Tuesday as Wall Street absorbed President Trump's bid to remove Fed Governor Lisa Cook, and as investors turned their focus to Nvidia. And what we saw today was a broadly green day, led by financials, some stocks in the tech space, Nvidia, AVGO, semiconductors as a whole were just broadly green, especially semiconductor adjacent names. But the best performing sector here was industrials, and this was just on the news that Korea is going to double the amount of planes it will buy from Boeing, and I think this just set the entire industrial sector alight. Very, very interesting. Even though it was just Boeing specific news, I couldn't really see anything else that would see this type of rally in industrials, but here we are with a broadly green day. And look, there were winners, there were losers. Such goes the market. Energy, real estate, communication services, and staples were all in the green, but again, not disastrous. And I feel like I've said that every single day, because a lot of the selling we've had in these names have been very orderly. A lot of the buying has been very orderly as well, with the best performing sector being the XLI industrials as well as the XLF. And this just is a barometer for what actually the Russell 2000 did. You see, the Russell 2000 is filled with a ton of industrials and a ton of regional banks. And again, we saw that broad market rotation into the RTY. These sectors right here are the S&P 500 sectors. And again, broadly green, and even gold did gain here today, probably on the back of some of the Fed independence issues. We'll talk about that a little later on in the video. But you know, most sectors did gain, and it was gains across the board. Mid caps, small caps, growth, value, core, all across the board gained except for mid cap value, which was pretty much just flat on the day, slightly in the red. But US stocks gained today, but it wasn't the case globally. In fact, Europe was actually very, very red. So too was the Middle East. Most of Asia, Australasia, I should say, very, very red across the board, including India, China, Japan, Southeast Asia. But North America looking very, very solid. South America was mixed. And all in all, it really was a day to be in American equities, despite some of the volatility and Fed independence issues that we have here. The president said late Monday that he had determined there was sufficient cause to oust Fed Governor Lisa Cook after the top Fed official persistent demands for her resignation over allegations of mortgage fraud. Cook said she won't step down. Cook's attorney said they would also file a lawsuit to challenge what they deemed illegal action. On Tuesday, Trump signaled that his administration had many very good people in mind to replace Lisa Cook, adding that he expects to soon hold a majority at the Fed, the majority being the people on his side of the aisle, paving the way to lower rates, which I think we're going to get anyway for the rest of the year. The Federal Reserve also came out and said that they will abide by any court decision determined by Lisa Cook. So absolutely crazy stuff. We'll see how this plays out. I'm not sure if this is constitutional or not, but absolutely crazy that this actually happened. And I think part of the reason why we actually saw gold catch a bit had to do with just this news right here. Fed independence in question. Now, we also got some other news here. Donald Trump came out, put a tweet pretty much saying that he will put severe tariffs on countries that impose digital services taxes on US tech companies. He said that US tech companies are neither a piggy mat nor the doormat of the world any longer, and they need to show respect to America's amazing tech companies. And I agree, these digital service acts are completely illegal. They don't impose them on China tech companies, just on US tech companies. And Trump is finally fighting back. We also got some economic data that was very, very upbeat right here. Durable goods came in much better than expected, 2.8% in the negative versus the negative 4 0.8% consensus, very solid. Transport came in at 1.1% versus the 0.2% consensus, and then consumer confidence came in at 97.4 versus the 96.2 consensus. So very, very solid stuff, especially the durable goods orders. That is a nod in the right direction, and I think that's part of the reason why we continue to see the market broadening today. Great economic data puts us in pole position for small caps and mid caps to rally. Ultimately, rate cuts coupled with a good economy, that's what small caps and mid caps need for them to outperform in 2026 and even for the rest of this year. And looking at some market movers, MongoDB was up 23% on the back of its earnings. It beat on the top line, beat on the bottom line, raised its guidance. This was actually a stellar report, and the market definitely giving management the props after the quarter they just put up. Okta, ticker symbol OKTA, also reported their earnings. They were up 5% after beating the revenue estimates, beating earnings estimates by a lot. Guidance was reiterated, and the market seems to love their earnings. Then Interactive Brokers was up 1% today on the news that it will be joining the S&P 500 on August 28th, replacing Walgreens Boots Alliance, ticker symbol WBA. And then for everything we saw today, there was 3,400 advances, 2,800 decliners. We saw net outflows in both the Nasdaq 100 and New York Stock Exchange, with the S&P 500 gaining. And then market momentum continues to remain solid. Everything from the 5-day to the 200-day moving average continues to be above the 50% mark. And again, until these actually break, the market will continue to move higher and be supported by both breadth and momentum. Now, today was a broadly green day as we continue to go ahead and reach for that 6,500 area in the S&P 500. Both the S&P 500 and the Nasdaq 100 were up 0.4% today, but saw outperformance by the Russell 2000, mid caps, but not necessarily small caps. And you can see right here, the broad market, the RSP, was actually flat today. So a very interesting day of trade. Both value and growth gained, but growth outperformed value, but still a solid day. Wherever you were positioned in the market, you probably saw green in your portfolio. Futures are catching a little bit of a bid. European stocks and Indian stocks were down, but Middle Eastern stocks gained and China stocks were virtually flat. Crypto ripping off the lows. You can see Bitcoin was up 1.43%, Ethereum up just shy of 5% at the 4,500 level. And as long as we continue to hold the 4,000 level, that's really, really good for Ethereum, and the 100,000 level, that's really, really good for Bitcoin as well. Looking at the VIX, volatility did tick down. We also saw yields tick down, but the 10-year yield ticked up ever so slightly. Very interesting. And then the US dollar fell 0.23%. And again, that probably has to do with Fed Governor Cook and the vote of confidence in the US and the US dollar. But inconsequential really, because the dollar was also up nearly 1% yesterday off the lows. TLT bonds were flat, gold gained, and silver was actually unchanged. Now let's go ahead and talk about the S&P 500. So we continue to trade at these highs here on the weekly chart. Going into the daily chart, you can see that we had a very strong green day here on Friday after Jackson Hole. Then yesterday we had a red day, and now we had a green day. And that's exactly what I said we would do yesterday. Go and watch yesterday's video. I said on Tuesday we are probably going to put in a low, and then we're going to go ahead and retest these highs and probably go ahead and take out all-time highs into the end of the week, into PCE, and then that's going to be determined where we go next. So we probably are going to go ahead, trade at these highs, and then Nvidia's earnings tomorrow, but more importantly, PCE inflation, that's going to determine if we actually go ahead and have price discovery to the 6,600 area, or if we actually go ahead and test some of these lows that we see right here at the 63.45, the 62.65 area, and potentially even the 61 area. Now, nobody knows what's going to happen with PCEs, and it's far better to react to the data as it comes in rather than predicting what's going to happen, because that is a binary outcome. You're either going to win or you're going to lose. Whereas if you just react, you might not catch as much of the upside or the downside, but you definitely will put yourself on the right side of the trade. And that's ultimately how you generate alpha. But the S&P 500 looks really, really strong. We're at all-time highs along with the Nasdaq 100. And again, even if we do get a slightly hotter than expected PCE inflation print, and even if we do get Nvidia earnings that don't quite meet the market's expectation, I do think the market will probably brush those aside, because there's so many factors that are at play right now, but that will cause short-term volatility. Ultimately, the best case scenario is we get like a double beat and raise in Nvidia's earnings, which I think is going to happen. Probably going to see a double beat, probably are going to see a raise, and then we get cooler than expected inflation. And that will just give the market the green light to rally along with the rate cuts. If we do get a hot inflation print, that does provide a little bit of uncertainty in the market, especially in the near term, especially in the month of September, which is a seasonally weak month. And that's just going to give asset managers, investors, and the retail crowd the green light to go ahead, take some profits, and buy the dip at a lower level. Now, if you're looking for a way to play rate cuts in this market, the Russell 2000 is one way. In fact, I'll do one better and say the S&P 600. The S&P 600 is what you want to do. This is just profitable small caps. It's just the 600 best small caps in the market right now. You can see from the tariff lows right here, things are looking rather exceptional. We've got very, very solid momentum, and we're actually taking out some of the highs we made right here. Ultimately, the next step for the Russell, for the S&P 600, is to go ahead and take out these highs at the 1467 level. Once we take out those, we can target these all-time highs right here, just above the 1500 level. The momentum looks very, very solid right there. And ultimately, we just want to be buying dips on the way down if we do get pullbacks, right? If we do get pullbacks, we just want to be buying dips, because I do think momentum is definitely on the side of the broader market. We are seeing that right now. There are times when the RSP is outperforming. There are times when the Russell 2000 is outperforming the S&P 500, but we are definitely seeing capital flow into the smaller names, into the mid-cap names of the market. And I do think that's going to continue, especially if the economic data comes in solidly, the inflation data comes in cool, and we get rate cuts. That's really, really going to help these mid-cap, small-cap names outperform, because they are incredibly rate sensitive. And they tend to also have like shorter duration debt on their portfolios. And we do know that the Fed, when they cut rates, it really impacts anything from the 2-year to the 5-year the most. The longer end of the curve tends to do its own thing. I mean, if you look at last year's rate cuts, the Fed cut rates by 100 basis points, and we actually saw a steepening in the 30-year yield. But the 2-year yield actually did fall about 70 basis points after those cuts. So if we do get onto another cutting cycle, let's say it's 100, maybe 150 basis points in total through 2026, that's just going to immensely help small cap. So that's the way to play. If you want higher beta, Russell 2000, the S&P 600, or even just the S&P 400, the mid cap indices, they look really, really good. What should also benefit from that is cryptocurrency. Now, looking at Bitcoin, guys, there's something very interesting I want to show you about Bitcoin right here. So this is the daily chart of Bitcoin. I think what we have right here is probably a low being put in. Whenever we look at the type of lows that Bitcoin puts in, right? When we see a low put in right here, we then actually normally make a lower low, as you can see right here, and then we rip to the upside. We did it here as well. We put in a low, we make a lower low, and then what happened? We rip to the upside. And that's exactly what we're doing right here. You can see we put in a low, now a lower low, we grab liquidity on the downside right here. What comes next? We probably go all the way to the 140,000 area, because that's what global M2 money supply is telling us. It's pretty much telling us that top end of the range is probably anywhere from 130 to 140,000. So there's still tangible upside to get to the top end of the range. If we go ahead, take a measured move, we're looking at about a 22% rally into the end of the year. I think you should also see outperformance from something like Ethereum. Ethereum acting really, really well, as long as we hold this level right here, and ultimately this 4,000 level, this yellow line, which was previously a very, very strong support level, as you can see, where we made these highs in 2024 into the start of this year. We've broken above that, and now we are literally, we're literally stepping higher, making higher highs, higher lows into new all-time highs. Very, very solid. Anytime we get something like this in Ethereum, this is a gift. My end of year price target for Ethereum is 6,000. I think we're going to see that, but do be prepared for volatility, guys. And diving into sentiment, this is the fear and greed index. And right now we are sitting in the neutral zone at 43, which is actually closer to the fear zone right here than it is to the greed zone. So we have seen sentiment really pull back. And this is in the context of the market being at all-time highs. And when we get sentiment where it is right now and markets at all-time highs, that can often be a very healthy sign for the markets. It means investors aren't overly euphoric or complacent, two common warning signals at major market tops. Instead, there is caution, there is skepticism, which suggests there is money on the sidelines ready to enter at the right time. This dynamic often supports more sustainable rallies, as gains are driven by fundamentals rather than hype. And the fundamentals are looking very, very good. We know this. We've tackled this on this channel so many times. Earnings growth of 12.9% for the quarter in Q2. The market estimate or the expectation was for 5.2% coming into this earnings season. Revenue is smashing, and what we're also seeing is margins improve drastically. And while we did see a tick down from the previous quarter right here, this is still higher than the same quarter last year. And we're looking for a massive inflection bump. And we're looking at mid-teens for S&P 500 margins, into 2026, early 2027. And a lot of the margin story is going to be dependent on rate cuts. The market thinks we will be getting a 25 basis point rate cut in September. Goldman believe we are going to get 4 consecutive rate cuts of 25 basis points through the end of the year. And that is going to support the market, stocks, the fundamentals, and margin. It's also going to support the macro, where the LEI just triggered a recession signal in the month of July. Take it with a grain of salt though. The LEI is heavily weighted towards survey data. We do know that the survey data has been heavily unreliable and has been deteriorating over the last 20 years. And even though this does suggest further economic weakness, I would prefer to look at the hard data. And when we actually look at stock like the weekly economic index, it's sitting at the 2.5 region, which is still very robust, roughly in line with what we saw pre-COVID and right after the disinflationary burst. It's telling us that the economy as it is right now is still largely okay. Obviously, we do have to look ahead. And when we do look ahead, we get the Q2 GDP estimate. That's the big data point on Thursday. The consensus there is for 3%. And then we get inflation data as well as income data on Friday. With regards to earnings, all eyes will be on Nvidia and CrowdStrike for those in the cybersecurity space. But we also get Snowflake, HP, Trip.com, NetApp. They're all reporting earnings. ANF as well as Williams Sonoma is reporting before the open as well. But everything we'll be looking at, but the entire market will be looking at these two names right here, guys. But if you made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, comment for the algorithm. Cheers.